All right, so for those of you that are sticking around for the in-depth version, we can go ahead and continue on here. So we're going to go ahead over to our Games Workshop Financials. We're going to look at the statements as opposed to the overview we were just looking at. And now we're going to go ahead and take a look at the income statement and see if we can figure out what are these red flags. So again, here we see from 2015 to 2021, we see all of our various metrics. What we're going to be paying attention to today in order is total revenue, which is basically just their sales, the cost of goods sold, which is essentially the cost of input costs for the products they sell, and then that will give us our gross profit. So we take total revenue minus cost of goods sold gives us gross profit, and then we take from our gross profit the operating expenses excluding cost of goods sold. So that's all the other expenses, paying employees, all that good stuff, and that is going to be subtracted from that number. So now we have the gross profit minus the operating expenses excluding cost of goods sold because that was already subtracted out, and then we get the operating income, and then from the operating income we subtract our taxes, and then the final number we get is net income. And that is basically just what they had left over in their piggy bank at the end of the year. So just looking back historically, we took a close look at some of the stuff here. We're just going to look at some of these previous years and some of the growth and what we see here. So essentially we see the most important thing are total revenue and then net income. So total revenue 221, net income 59, total revenue 256, net income 65, total revenue 269, net income 71, and then this is where we saw the massive jump. Total revenue 353, net income 122, and then we see this year total revenue 414, net income 128. So what I'm paying attention to is now when I look at these numbers, where did this diverge? Because we see somewhere along the way something got messed up, because we see the total revenue in the 2022 year ending was 353. And then the total revenue in 2021 year ending is 414. So we saw essentially a 61 million pound increase in total revenue. But our net income was 122 million, and our net income this year was 128. So the net income went up by 6 million, but the revenue went up by over 60 million. So we see roughly a 10% increase in the net income, which is not good, because we saw essentially a 20% increase almost in the net total revenue. So somewhere along the way, obviously expenses went up extremely high. So we can look at these numbers and see the breakdown. GW has obviously disclosed a couple things on their own talking about their expenses going up. But to tell you the truth, when I actually look at these numbers and everything, it looks like poor management. So gross profit, obviously we see here in 2020 was 253 and then 287. And then total revenue was 353 and 414. And then cost of goods sold in 2020 versus 2021 went up from 100 to 127. So if their cost of goods sold in 2020 was 100 million, and their cost of goods sold in 2021 was 127 million, it means it went up by 27%. So the cost of goods sold went up by 27%, but we see the total revenue went up by only 17%. So we actually see that they have raised their prices to make up for sales. So essentially, if I sell one item at $100, or I sell two items at $50, my total sales is going to be the same, the total revenue. But the cost of goods sold is going to be completely different, because if I have this one widget that I'm selling at $100 and it costs me $50, I make $50. But if I have two widgets I'm selling at $50 and they cost me $50, I make $0. So as these numbers fluctuate, we can look at the relationship between them and see what's going on here. So they made more total revenue, which we know is partially reflected by their price increases. If you were previously selling $353 worth of merchandise and then you raise the prices across the board 12%, or let's just say 10%, you would expect another 35 million in revenue. So that would put us at 391 million. So it looks like the 12% roughly that Games Workshop raised their prices is what took us up to the 414 million. So they didn't necessarily sell any more product. They just sold it at a higher price. And then here we see the cost of goods sold went from 100 to 127. So if we're saying they didn't necessarily sell more product or a lot more product, the cost of goods sold went up by 27%, didn't offset the increases in revenue. I'm sorry, the other way around. The cost of goods sold was not offset by the increase in revenue. So that is not good. That's not what you want to see. So let's get to the bottom of some of these other expenses as well. So if we scroll down here now, we see the operating expense excluding cost of goods sold. So we already subtracted out the cost of goods sold. So we don't want to subtract that out again. That's why it's excluded. So here we see again in 2021, cost of goods sold was 115 million and it went up to 130 million. So it went up by about 15 million. So it went up substantially less. So the operating expenses excluding cost of goods sold is not bad, but the actual input costs of their plastic or other products that they need, you know, the paper, packaging, etc., went up substantially compared to all their other expenses. So that is likely out of their hands. Probably has to do with their, you know, sort of not keeping product on hand and then just doing it when they need to and not wanting to store it, etc. So if they would have had a bunch of their input product, you know, whatever the plastic or the packaging, etc., already on hand, they would have probably seen less increases because they would have been using product that they had from previous quarters or halves or years. But instead, they like to minimize what they keep on hand as far as inventory for inputs and then inventory for, you know, the goods that they sell as well. So that's probably why they took that excessive hit on their cost of goods sold. So then next we see the operating income went from 137 million to 157 million. So we saw that went up by about 20 million after taking out all the expenses. And then obviously we see the taxes removed as well, 28 million. Strangely enough, the taxes were 28.9 million in 2021, and they went to 28.1 million for this year. So they actually went down. The taxes went down even though everything else went up. So that is sort of interesting. So the UK obviously did something right there to help out companies. So then finally we see our net income down here. So again, we see the net income went from 122 million to 128 million. So we saw a 6 million increase on net income with an over 61 million increase on sales. So that extra 61 million they sold, they should have made roughly 20 million on because of their profit net profit percentage. But instead they made about 6 million. So they fell substantially short on the additional profit. But again, when we look at this trending, profit was 13 million, 30 million, 59 million, 65 million, 71 million, 122 million, 128 million. So we had a huge jump right here, and then we have maintained, you know, average growth. We saw here previously 59 went to 65, so it grew by 6 million. 65 went to 71, it grew by 6 million, and then 71 went to 122. That's a massive jump, obviously. But then from there, 122 went to 128. So while this may look alarming to some people, really all it is to me is just regular. We basically just went back to regular growth, which was for the last 2 years before that about 6 million per year. So that is not a bad thing in my opinion. We're just right back onto like our normal trend line. And then we looked at the earnings before income, tax, distributions, all that good stuff as well. So that is the overall general breakdown of the financials. Again, we see Games Workshop is doing well. Obviously, some of their input costs went up, and that is potentially an issue for the company as it has cut drastically into their profits. They are still very much profitable. They are still in excellent shape. Their balance sheet is in phenomenal shape. Their income statement as well. And the general overview and fundamental breakdown is looking good. So I'm going to go ahead and wrap this video up here. There will be a further extension to the video coming in the near future as well, where I'm going to go through the 25 pages of Games Workshop's annual report and essentially talk about what they had disclosed as some of their biggest risks, what they had talked about as some of the biggest growth potential, and what they see going out into the future. And then I'm going to speculate a little bit as well, as obviously in those releases, public releases, it's in their best interest and fiduciary responsibility to sugarcoat everything and make it sound good. But there are definitely a couple serious headwinds in there and some things to pay attention to going into the future. And then also we're going to take a look at the stock price as well, discuss that and where that is likely headed as well going into the future. So if you did enjoy today's video, if you're into this full-on finance nerd stuff, make sure to like and subscribe. Obviously, this is not the typical type of video we do. We do daily videos, reactions, reviews, news, of course, painting, modeling, conversion, magnetization tutorials for pretty much anything to do with Games Workshop, Warhammer 40,000, Kill Team, Necromunda, Age of Sigmar, warcry, and some Horus Heresy as well. So please subscribe, really helps out the channel. Take some time to leave a comment down below. Let me know what you think. But the fact of the matter is, and the overall wrap-up, when it's all said and done, Games Workshop is in nice shape. They're not going anywhere anytime soon. And even though they did lose over $2 billion in market cap value, they are still a profitable company with a nice balance sheet in excellent shape. And the truth is, we will likely see growth going into the future. There are some serious headwinds for Games Workshop, and if they don't correct course or make some changes, it's likely that they do see some issues going into the future. Some declines in, either sales or revenue, which is not what you want to see year over year. We want to see sustained growth. So appreciate everybody to take a look today. Hopefully you enjoyed the video, and that is it. Warhammer Man Studios. I'm Warhammer Man, and I'm out of here.